Okay, this is the intersection of blockchain and real estate session 1015. And I'm going to make a quick introduction of our panelists. I just want to say my name is John Markunas. I have a little company called Chain Consultancy, and we provide advisory services to startups in the blockchain and real estate space. This panel and the previous panel at 9 o'clock was organized, it's sponsored essentially by FIBREE, which is the Foundation for International Blockchain and Real Estate Expertise. I know that's a mouthful, but it's fibree.org, and we're a nonprofit based out of the Netherlands. And in fact, a few months ago, we signed a nice agreement with Nathan Pettyjohn and his group, and we're strategic partners, and we'll be doing these going forward in the future as well, providing blockchain and real estate sessions. We did this actually in Madeira, the island of Madeira in Portugal in August, so it went really well. So I'll start off with some introductions, very short. To my far left is Will. Will Powers is the head of capital markets for AKRU, AKRU, which is a commercial real estate tokenization company and platform. So we've got some real good expertise on real-world applications of blockchain and tokenization, fractionalization. To his right is who you met earlier, perhaps, is Alexander Kanen Esquire. He's the managing partner and founder of Kanen Law, and he has an extensive background, and we're really glad he's here because he's going to keep us on the straight and narrow on the legal and regulatory and compliance stuff.
No pressure.
And he specializes in real estate, corporate, and blockchain law. To his right is Daniele Denes, comes to us from Sao Paulo, Brazil, living in Fort Lauderdale. And Daniele has a unique background. She's originally a computer engineer, but is now working with SpiceX, which is a new code application platform for data integration, case management, and workflow management. She's also a technology advisor to a startup called Square Foot Coin, which in fact you can buy a square foot, a token of a square foot in that company. So Daniele's expertise with SpiceX is in the Web3 space, so she'll be talking about Web3. And to the right of Daniele is Kelly Dolyniuk, who is the COO Propy. Propy is becoming well known. They have a lot of services in the real estate and blockchain space. Transaction platform, providing a lot of different things. And we're going to ask Kelly to sort of focus on NFTs for us in the blockchain space. And to her right is Laura Pamatian. She is the founder and an advisor and business development consultant as well with HeightZero Real Estate, and which is a blockchain and real estate advisory firm. And she is also a FIBREE member. We thank you for that. And also, Daniele is also a FIBREE member, and she's the chair of the Fort Lauderdale chapter. So this is going to be fun. I thought I'd provide a quick backdrop to the size of the real estate industry and why people like us here are in it or going into it. And I wanted to ask real quick if there was anybody from the real estate industry here, real estate practitioners. Okay, we have one, which is my friend Matthew from Magma. Thank you. You're going to learn something new here. So, the real estate industry is absolutely incredible in terms of size. And a lot of numbers have been, and Laura, you're quite familiar with this. The numbers are staggering. Throughout the world, the residential and real estate commercial market comprises $228 trillion. And in the US alone, it's about $3.8 trillion. So it's a huge market. But the funny thing about it is only 3% of the global population is invested in real estate. 3%, and this is a study that I can cite from a company. And the other incredible thing about this, which is mind-boggling, is but 80% of the world's population thinks real estate is a good investment. And the amount of property around the world, commercial real estate and residential, I guess, only 7% of that is available to retailers, to the retail investor market, which I believe is the market that Will is going after, which we'll talk about a little bit later. Now, the other interesting thing is that there was a study done, and it's in they cited that in the next 5 years, if 0.5% of this total, the 228 trillion, were to be tokenized, fractionalized, that would result in 5 years, that would result in a $114 trillion market for us, for them, for property, and well, for us, right? That's amazing. And so that's why I think that there are so many companies starting up in this space, not only in tokenization, but on the transaction side, NFT side, and so forth. So it's really amazing. And part of the purpose of this panel is to cut through the hype and the BS. So my questions will be very pointed, because we want to provide you with really an accurate measurement of the market and really what's going on in real-world use cases. So let's start off with Danny. Danny is a Web 3.0, Web 3. I don't fully understand Web 3 yet, but if you would help us out, or help me out, and describe what it is, where it was before, Web 1, Web 1.0, Web 2.0,
Yes.
and where it's going.
Okay. For us to understand the value of Web3, let's go back. So the early 90s, we had what we called Web 1.1, which was only read, only static page. That it was really hard to create content, only programmers, and we just read. Read information. It was decentralized. Anyone could go there, they knew how to use it. And that's when the emails came with, a little adoption. 20 years ago, around 2004, Web 2.0 came. And it's basically read and write, the social media. So it gave us the knowledge and the ability to write, write blogs and, write comments and create content. And this was, a lot of people don't even remember, I think, Web 1.0, because the past 20 years is, what we know, internet. The issue of Web 2.0 is that we don't own the data. We don't own the content. Now you see Google, Facebook, YouTube. You can go there, create for free, and they make all the money, basically. We don't own anything. So on the Web 2.0, the currency is our attention and our data. Based on our data, they create ads and sell us, what we like and what we search for. So it is Web 2.0, which is great. It helps us. Sometimes often people ask me, what do you think the adoption? What it needs to be the adoption for Web 3 and then we look back. It's just the value of our daily lives. So I see Web 3 as an evolution. Web 2 is not going anywhere. It's not going to disappear. You're going to wake up and oh, Web 3 is here. We do a lot of stuff with Web 3 already. We don't even know it's Web 3, like avatars. So basically Web 3, the two biggest pillars of Web 3 is ownership and decentralization. Which I think is very important. So on the Web3 concept, you create the content, you own the content, you own your data. So I think everyone here has an idea that data is the new currency. If you own data, you can do so much. And that's the beauty of the blockchain, because, it's a data that cannot be modified, cannot be deleted, is there. And I think these two pillars is what brings value to the real estate industry, the ownership and the decentralization, which, is basically in the blockchain that we have, title companies, utilizing blockchain, the real estate tokenization with the tokens, NFTs. So I'm not gonna go too deep because I have my friends that know more. But basically, is that Web3 is here. There's, the decentralization apps, DAOs that we heard before, and I think the biggest two pillars that really impact the real estate is the ownership and the decentralization.
Yeah. With Web3, does it help you, the owner? Does it help get the data to the appropriate owner?
Yes, on the Web3, you create the content and you own you own, like, it's not like a Google or Facebook. It's not centralized.
Okay.
So you own your data, basically, and your information.
Yeah, okay. I think as we all know, two of the hottest topics right now in real estate is tokenization, fractionalization, and the use of NFTs. But Laura, who's an expert on the tokenization side, tell us a little about what's going on in terms of overall with tokenization and where you think it's heading.
Yeah.
And then we'll jump over to NFTs.
Yeah, I think, John makes a great point. Tokenization is the hottest topic in real estate right now, right? And why is that? Because there's over $320 trillion of real estate out there, and less than 1% of it is liquid, right? Which is what John was saying earlier. Tokenization is solving for that, right? Tokenization is going to democratize the real estate industry, right? It's going to be inclusive. It's going to allow people to participate in the industry that couldn't before. So that is one of the biggest reasons. Another reason is because it's probably the most practical application of blockchain in real estate right now as well. So there's different types of tokenization. As you probably know, you're hearing about NFTs, you're hearing about utility tokens, security tokens. There are all different types of applications for real estate. We have a lot of traction in tokenization to raise capital for real estate and security token offerings. Fully compliant, completely different from product like cryptocurrency. And, for that reason, I think because it's so practical and because we're staying, we're coloring within the lines compliantly right now, we're getting a lot of interest. And real estate owners, developers, syndicators are expressing that interest because it's giving them a competitive edge in the industry, right? With when they're raising capital, when they're competing for investors, et cetera. And then tokenization, when it comes to NFTs, I think, obviously Propy is doing amazing things with the transfer of product. And Kelly can probably speak to that as well.
Yeah, I'm going to ask, well, all of you, but especially Laura, you and Will, what some of the challenges are with the fractionalization and tokenization model. And I have a couple of thoughts about couple of the impediments. One is reaching the secondary market, retail investor market, which you're trying to get to, and the other is liquidity. But Kelly from Propy, tell us about what's going on currently what's going on in the NFT world with real estate and how it will be used, where it's going.
Yeah, sure. When you think about NFTs, many people think of art. We just came from Art Basel Week here in Miami. But what is an NFT? It's ownership of a unique asset, which is what real estate is. Propy has done the first real estate NFT in the world and also in the US. And the process is similar to a traditional home buying process, but reversed. So at first, the property will be put up on the marketplace, essentially. And then all of the things that are traditional that happen in a real estate transaction. You still have to have showings, obviously. You still have disclosures, inspections, all of those sorts of things. Those happen. We're minting an NFT for the property. And then once the buyer and the seller are selected and come together, we're able to process that transaction in about 15 minutes. So we think this is the future of real estate, where we'll be able to process transactions in a much more secure, transparent way, so that, and just much more quickly, so that each side of the transaction really knows what's happening, and at that point, when it is transferred from one wallet into another, at that point, it can be fractionalized. It turns into an entity that can be sold, traded against almost immediately.
And you talk about NFTs, and I know Propy is doing quite a bit with that. But right now, at this point, you can't transfer title. You can't transfer title, legal title, warranty deed, for example, to the land registry, to the county recorder's office yet with an NFT.
The way that we're doing it right now, and Propy is essentially a title business. So we are doing title transactions on the blockchain. We are still, right now, also recording those transactions through the county recorder's office. But we think that over time, that won't be needed, and it will just be the NFT or that blockchain record that will be the true indicator of ownership. Blockchain records can be held up in a court of law, and so we think that as they are immutable, and we see that's the future of real estate.
Yeah, I think that's the last mile problem, is getting that, when you're doing everything online, on chain, is getting that, the last mile is getting that title in an NFT and transfer it into getting the county recorder's office to use that, to employ that NFT in their system, yeah. Alex, we can't let you go without making some comments for us in terms of some of the, I don't know, compliance issues, regulatory issues, or legal issues that I think the NFT world is in, and that Will is in terms of the tokenization market. What do you see as legal or compliance issues there? Are there any?
So I'll start by saying I consider myself a believer, but I'm also a practicing attorney, and like it or not, I have to be grounded in reality and legal frameworks that exist today. So while the notion of an NFT, non-fungible token, is very compelling, as you mentioned, there's still not sufficient foundation for NFTs to really have a legal sort of enforceable function in today's legal framework. What I mean by that is, as Kelly mentioned, there needs to be a parallel universe between the things that we're creating as far as digital representations are concerned and the things that are actually enforceable under the current laws, recording systems, and such. So while technology presents a universe of possibilities and potential, a lot of it is still somewhat nascent, especially when it comes to transactional real estate. And in my view, the hurdles lie in multiple places. One of them, of course, is technological, which is being worked on very actively today. Another one, I think, is political and economical, because our current recording systems are basically a hodgepodge of counties and townships and cities and states. Each of them maintain their own centralized, government-maintained databases. There's little interoperability, if you will, between those databases, very little discovery as far as information is concerned, tremendous inefficiencies, which technology can automate and remove a lot of friction from, but they also present challenges, because transforming that entire system and bringing all of that on-chain presents a universe of problems. Some of the problems have to do with legal ramifications, right? We have to amend multiple laws having to do with UCC, good money laws, take-free laws. A lot of these things would have to be revisited so that we can now envision a new world with digital assets, which never existed when UCC was first enacted. Yeah. The same goes for the laws in general, right? Having to do with liability, having to do with recourse and collateral. So while the framework, the legal framework, is still coming together, and so is the tax framework, I think the potential is tremendous. And NFTs certainly have their own place in the future of real estate, especially when it comes to, at least at the outset, intangible rights.
You hit on something really important, political. There are 3,200 county recorders' offices in the United States. And you know how many are using blockchain for their processes? There's 2 in Wyoming, Carbon County and Teton County. And that's a political thing.
And it's an economical thing as well, because for each of these counties to transition onto another database is extremely costly, and they're foregoing a tremendous amount of fees that these counties generate from these systems.
Which is why we don't talk about land registries and county recorder's office because there's really not much going on there. You know, it's tokenization and NFTs, and that leads us to a really top commercial company, commercial real estate company, I'd say, which is doing fractionalization, tokenization in the commercial real estate space, which is the space I've been in over the last 30 years, commercial real estate. And Will Powers, describe your, in your terms, what you do, well, not what you do, but what AKRU does, kind of the processes, and then we'll segue into the benefits and the challenges of that obstacle. So.
Sure. Yeah, so what AKRU is we are a platform that tokenizes commercial real estate using blockchain technology. And then we have a secondary trading platform that allows investors to come and buy the sell the tokens. A lot of big words there. What that simply means when you're talking about tokenizing commercial real estate, the easiest example I can give you is we're all here at Fontainebleau. It's a beautiful resort. If you could take $1,000 and buy a piece of this resort and participate in the benefits of the real estate of this hotel and beachside resort, would you? A lot of people would say yes. So tokenization creates access for investors to invest in high quality real estate. They get the same benefits of owning real estate as any other real estate owner. They get the income off of their property. They get tax benefits. As the property appreciates over time, they get the benefits of appreciation. Real estate is a non-correlating asset class to stocks and bonds, so it's a great way to diversify. It's a non-correlating asset to crypto, so if you've had a little trouble with crypto lately and you want to get into more of a brick and mortar solid asset, real estate's a great way to do it. Buying real estate tokens is a great option to do that. The other side of it is for the asset owner, for the owner of a resort like this, the benefits of tokenization is it creates liquidity for them. They have a bunch of money in this building that they either have to sell the entire property to get access to, or they'd have to take more debt on the property. When you tokenize, it gives them access to the equity in the building that they can use for improvements, they can use it to redeploy to new projects, they can buy new assets, they can buy the lot next door and develop it. So it creates liquidity for the asset owners, and it creates access for the investors.
So you mentioned secondary markets, secondary platform. Is that built into AKRU, your secondary platform? They can
Yeah, it's a full suite. We provide all of the services from tokenization, due diligence, secondary trading, and secondary market.
Okay. Yeah. I don't know. Between you and Laura, describe some of the benefits of tokenization. Well, we touched on it a little bit on liquidity, right?
Yeah.
But what are some of the obstacles of, let's say, more mass adoption? You want to start off with that?
I think, Will said it perfectly, right? Those benefits are amazing. The hurdle is education, right? The education piece is really the part that's missing. And what a lot of people don't understand is that, and when they do understand it, right? When they do start to explore the topic and get into what the benefits are, they start to realize very quickly that it's something that we're all going to be doing at some point, right? Blockchain is the most secure way to transact, and tokenization, it helps democratize that process, right? It's going to let everyone participate in as investors, et cetera, and being able to, participate in this real estate. But like I said, the education is the most important piece, and that's what's missing.
I think there's a huge failure to articulate.
Yeah, exactly.
Just to add to that, we started doing conferences for real estate asset owners last November. IMN, a lot of multifamily type properties. I did a 15-minute presentation, and everyone's heads were spinning like the devil, and their eyes were rolling back in their head. They had no idea what I was talking about. Fast forward to this November, everyone knew what I was talking about, and I had a dozen property owners come up and say, we want to start tokenizing our assets. So in just 12 months, it's really taken off and people are becoming aware. But I agree with Laura 100%. It's education. And we're a disruptor in the space, and part of the burden of being a disruptor is you have to educate not only your potential clients, but you have to educate your competition. And if we have good competition in the marketplace, it's just going to grow the marketplace for us. So we're happy to, take on that burden.
Yeah, 5 years ago when I was actually focused on land registry 5 years ago, not 2017, and since nothing was going on, I switched over to tokenization and transactional. Propy was into land registry at one point before your time, but I look at, back then, 2018, other people in the industry were telling me two things. One, they said to me, I was trying to convert a company into doing tokenization, right? And he said to me, John, who's the market? And, you know, who are the investors, the retail investors? Who are the ones that are going to buy $100, $1,000 tokens? And where is the secondary market to provide liquidity? I don't really see that clear yet. Do you, Will? Who they are and secondary?
Yeah, I mean, we only allow accredited investors to come on the platform.
Okay.
Because we are security. We do it under Reg D 506C. So that's accredited investors only. When we change up and we go to a Reg A, not to get too deep into the weeds, but we'll change up the registration that we have that'll open it up to retail investors. And that's when it really turns in from a hockey stick to a rocket ship. So it's going to give anyone access. If you're in this room and you're just starting your career and you make 50 grand a year, you're not an accredited investor. But when the retail market opens up, now you can take that same $1,000 IRA investment that you're going to make, hopefully you're going to make, please make it, and invest in a piece of real estate like we're sitting into today. The secondary market is really what we're seeing is coming from more assets coming on the platform. When we bring assets, there are LP owners in that building that are going to start selling their tokens. So there's more people coming from the property side. And then we're out doing marketing and education direct to accredited investors to get them on board. But the third level, real quick, is that we also work with wealth advisors. Wealth advisors manage their clients' money. They believe in real estate to be a good investment. They want to make an allocation to real estate. Investing in tokens is a great way for them to invest their clients' money into real estate and still have that liquidity. So we have an RIA portal for them to make the allocation. So within those three areas, I think that's really where you're going to see the liquidity really increase and become more.
I have a thought on who the retail investors are, but let me ask you all, how many people here have invested in cryptocurrencies? Or want to admit it, I guess. And how many people here have invested in tokens of real estate? I didn't see any hands go up, did I? No.
One back there.
One? We have one.
Maybe, yes.
Okay,
Thank
well,
you for
two,
that.
actually. So that's pretty indicative, I think, of where your market is, where the retail investors are.
I think really quick, John, is that exactly what you're saying, Will, is that right now we are there's so much use case coming into the market under Reg D, right, which limits the investors to accredited investors, and that's really why we're not seeing a lot of secondary market trading, right? Because when you're targeting accredited investors, according to statistics, right, 6 to 8% of the investors out there are accredited. So if you're only limiting your audience to 6 to 8% of the entire audience that you can target, of course you're not going to see the kind of liquidity that you will if you're going to hit retail. So I think that when this does start to evolve into the Reg A, the retail investor, being able to offer it to them, that's when we're really going to see the adoption and liquidity options and the integration.
And that's a good point because we're talking a lot about the U.S. market.
Yeah.
Outside U.S. is very different because when you need is very based on the economical and cultural. Like for example in Brazil, it's a lot easier to tokenize because it's hard to anyone afford to buy a home, but they want to invest in a piece of a property.
Yeah.
So different economy situations is the adoption is going to be faster or slower.
Alex.
Personally, I think this notion of liquidity at this point is a bit oversold. I feel that a lot of public markets have been liquid for ages. In fact, there are parts of real estate markets have been fractionalized for ages. So public markets have enjoyed liquidity for many years, right? Hundreds of years from when a bunch of Dutchmen and Englishmen got together on the corner of Broad and Wall and came up with these joint stock ownership certificates. So public markets have enjoyed liquidity for a long time. But private markets, the problem with liquidity in private markets is threefold, right? Number one, in private markets like real estate, commercial real estate, buyer and seller cannot easily find each other. So there's very little price discovery. The markets are very shallow. Secondly, once they find each other, It's a nightmare papering up the transactions, raising the funds, subscriptions, managing the cap tables. And thirdly, and most importantly, the reason for illiquidity is regulations. Regulations, regulations, regulations. If you're an issuer, you, as a fund manager, you have to manage a minefield of regulations. And as an investor also, there's a lot of things that one has to comply by, KYC, AML. So the true magic in this technology is automating compliance. It's sovereign, programmable compliance. That's the true magic of this technology. This is where magic of liquidity comes from. You need a true two-sided market and price discovery. Just because the asset is fractionalized and slapped on a distributed ledger doesn't in and of itself make it liquid.
Those are my sentiments exactly. We're running out of time, but I do want to ask this last question, and this kind of helps. The answers will kind of help us cut through the hype, some of the hype, and BS associated with adoption. And so the question is, when will we see more of a mass adoption of tokenization and NFT use? And I'll just make a quick comment. I think the market, the investor market, retail market for tokenization and NFT uses are the millennials and Gen Z and Gen X. As of, I say this sometimes, as of last year, the first quarter of last year, Gen Z, millennials, Gen Z, Gen X comprise almost 60% of the US population. That's why I asked the question about cryptocurrencies. They're buying crypto, and I think they can be converted into buying a token.
Exactly.
It's almost like the same thing, but it's safer and it's more lucrative.
It's not the same thing. Respectfully, the problem is we conflate crypto with digital representations of real-world assets. It is not the same thing. Real-world assets are representations of tangible assets that have a legal and physical framework in our world, and there are speculative assets, which we commonly refer to as crypto, which represent a lot more than that. Sorry, I didn't mean to interrupt you.
No, you meant to interrupt. I stand corrected. I stand corrected.
Yeah.
Will, let me, real quick, we're running out of time. When do you think we'll reach the tipping point where tokenization, fractional real estate will be a normal thing to do, to buy?
Yeah, I think there's two parts to it. As I said, over the last year, I've seen just an incredible larger adoption from the real estate side. BlackRock last week put out an article saying that they believe that tokenization is the next step for private equity, which is inclusive of real estate. Apollo, we've had calls with, which is one of the largest alternative asset owners in the world, says that they want to tokenize all of their assets. So the smaller fish are coming, the smaller fish are happening, the bigger fish are coming, and once one of those major players drops into the market, is game over.
Bingo. The institutional players are going to lead the way for sure. Kelly, what do you think in terms of mass tipping point?
Yeah, I mean, you said 3% of the world invests in real estate, and I think there's obviously a long way to go. But when I think about our kids and just our generation, my generation, we think about things being very easy and simple. I want to know where the Uber is on the way. I want to know where my groceries are on the way to delivery. That's what it's like to buy a property through Propy, and that's what it's like. I think eventually consumers will expect the experience to be like that. So I agree with you. I think we need to have one big player at least really in it, and then the rest will trust because of the trust of that big institution.
But how far out? 2 years, 3 years, 5 years, 10 years, you think?
Mass adoption, 3.
About 3?
3.
What do you think, Danny? How far out for mass adoption? Normal.
Not that positive. I think like around 5 years.
And Laura, how about you?
Real estate.
Yeah, I would say 3 to 5. I mean, the big players are already involved. We're just not really hearing
Okay,
a lot
3 to
about
5?
it. Yeah.
I'm going to go 2 just because I'm an optimist.
Yeah, that's what I used to be, an optimist. But Alex, what do
I'm
you
going to
think?
be with Will. Some of it is here already, and some
All
of
right.
it will take a long time. Yes.
Wow, we went over time. I apologize to the organizers.
Someone has a question.
We have time for one question, really? Okay, we'll have one question here. Sir, real quick.
Can you speak up, please?
What is the real estate business doing to combat the problem of wallet payload injection for asset transfers?
Well, you know, that's a technical question. I don't know if
Yeah, I think
can
that a
answer
lot of us,
that.
we're not really, we're still
I couldn't
traditional.
hear.
So
We have to end this, but they promised to be around for all morning to answer any questions that we have. And please help me give them a round of applause for a tremendous panel.
Thank you.
Thank you.
Great job, John.